All right, everyone. Well, welcome into today's webinar. And what I want to talk to you about today is how to fund a multifamily deal. Um, I get a lot of questions about this, and here's some of the questions that we get. How much of my own money do I need to buy an apartment deal? Or what type of financing is available on these apartment deals? And then another question I get is, what if I don't have the income or credit to qualify for a loan? What are my options? Or maybe you're asking, can I get 100% financing for a multifamily deal? So we're going to talk about all of that in today's webinar. But real quick, if you don't know me, if you've never worked with me before, my name is Stephen Lee Thomas. I'm a multifamily investor, business coach, entrepreneur, and podcast host. A little bit more about me. My partners and I have invested in over 15 deals. It's over 3,000 units across multiple states over the last 7 years. So we've been doing this for a while. We've got some experience, some of the ups and downs. I'm going to share with you some of the things I've learned over the years. If you guys got questions, go ahead and drop them in the comments as we go through, and I'll do my best to keep track of that and get you those responses. How to buy multifamily deals using other people's money. And that's what I really want to talk to you about today is how can you do this and not have to use your money or very little of your own money? And that's really the secret to this, getting into apartment deals. I've talked to a lot of people who say, I'm going to get into a single family deal. I'm going to flip a few of those, and then I'll get into a duplex and then a triplex, then a fourplex. And they're just like, it's just this constant cycle of a lot of hard work, or people, maybe they want to wholesale because they're trying to get some money that way. But there's a much easier way to do this. And so, why do we want to use other people's money, or OPM for short? So, the reality of it is, real estate, it's a team sport, and you absolutely do not need to do this alone. And I recommend that you don't. And when you do this, it gives you a lot of leverage and allows you to buy bigger properties with less personal risk. And so, for example, my first apartment deal was well over 100 units. And I had very little of my own money, and I was not leveraging all of my risk. There was other people we brought in. The reality of it is, anybody who's a successful real estate investor, they're using capital from banks or private investors or maybe some seller financing, and that's really the secret here to scale. And so, what I'm going to talk to you about is a lot of these options here, with that goal of creating a win-win deal for everyone who's involved. Three types of other people's money strategies that I want to talk to you about today, and I'm going to walk through each of these. So there's syndications, and that's just a fancy way of saying we're raising money from other people, or we're using other people's money to invest in these deals, and that's where you raise money to do this. Bank loans. I personally like this option. I know there's some people who say, "Oh, no, don't use bank loans," and because then you've got too much risk. But I disagree. When you can get into a large deal, and the bank is bringing a large amount of money to the deal, that's going to allow you to get a lot bigger, a lot faster. And then there's also this idea of seller financing. Like I said, we're going to break down each of these as we go through. So, how does a syndication work? So we have this nice diagram over on the right-hand side, but at a very high level, you've got a small group of people, and that could be two, three, four people. Those are the general partners. They find the deal, they fund, and they manage the deal. So they're out there doing the work, they're doing the asset management. And then what they do is they go find limited partners. Those are passive investors who provide capital. And generally, that starts with your own personal network. You reach out to some people that you know. It can definitely be family and friends. There's some caveats to that, but it could be coworkers, or you could go to networking events and find people who want to invest in deals. The reality of it is, there's a lot of people who don't want to do the work and get into these deals. They just want to invest in them. So as a general partner, we've talked about this in some of our other trainings, but the general partners, they earn fees and they get equity in the deal, where the limited partners, they just get passive income and they get part of the profit share. So you just kind of got to pick of, which camp do you want to be in? My guess is most of you probably want to be general partner because there's a more upside there. And how do we split this? It's either generally it's a 70-30 or 80-20 in favor of the investors. So the 70 or 80 here would be limited partner shares. and then the 20 to 30 would be the general partners. And I've got another training. I think I did this webinar 1 or 2 weeks ago. But what's awesome about doing syndication is because you're the one out there finding the deal and structuring it and doing the asset management, you get, without having to necessarily put your own money in, you just get 20 to 30% of the equity in the deal. So it's a fantastic way to make money in your deals. Um, Now, why investors love syndications? And so, as a passive investor, it's very, very, very hands off. There's the extent of it is you got to educate yourself, and then there's also going to be you're just going to get better returns in the stock market. Over the long haul, you're generally getting somewhere between 50 and 20% as a passive investor. As a general partner, if you're putting the deal together, it's probably 3 to 5 times that. You also get tax advantages. You get depreciation, cost segregation. So just if you don't know what that is, just know that you get to you pay less in taxes on the money that you're earning here as opposed to the stock market. And then you have this backed by real estate, real assets, not speculation. And so that's one of the things I love about this alternative investment. And by alternative, I mean something different than your traditional stocks and bonds. It's a real asset. It's real tangible. You can go touch it, not where Elon Musk or Donald Trump or someone like that goes and posts something on Twitter or X, whatever it's called, and then the stock market doesn't go up or down. Or actually, I saw yesterday that the stock markets remained relatively flat because the Federal Reserve didn't lower interest rates. Now, I didn't look into it deeply, but that's speculation. Whereas opposed to apartments, there's like real apartments. People have to show up and pay rent every month. So how do you find investors for your deals? If you're going to do this path, how do you find investors for your deals? What you're going to do is you're going to start and you're going to build a personal brand and credibility. And I don't want you to overthink this. This just means post what you're doing. Go online, post what you're doing, and saying, "Hey, I am getting into apartment investing. I went and did a property tour. I submitted an offer." All you're doing is saying that I'm a person who's going after apartment deals. Educate your investors through webinars, newsletters, and content. So think about this. You're here. I'm providing education to you guys. If you were here, wanted to be passive investors, I'd be providing education that helps you get the knowledge you need to be comfortable doing a passive investment. Show up to networking events, go to conferences, meetups. And then the other thing I say is offer a clear, easy to understand investment structure. There's a lot of complicated ways to do this. And you'll see terms like IRR, equity multiple, cash on cash. Nobody talks like that. I mean, if the apartment investing space, people do. But so my advice to you is, if you're going to start raising capital, you're raising your hand, you're saying, you know what, I think I could go out. I think I could meet some people. I know some people who might invest in deals. You have to meet them where they're at. Okay. Understand what they've invested in or the lack of knowledge they have, because most people don't have a formal education on investing. And you're going to talk to them in simple terms. Hey, if you give me this much money, I'm going to give you this much back in 5 years. Okay. Real simple, just a basic return on investment. And then your job is to educate them. And if you educate them along the way before they get into that first investment, then they're going to be much more likely to invest with you. Okay. So that's really option number one there, is raising capital for other people. And I think everybody should be doing this all the time. Anybody who's in apartment investing, you should be able to raise a little bit of capital for any of the deals you're going to be in. All right. So next, let's talk about bank loans and funding your deals. Now, banks typically fund, I have 70 to 80%, but I'm going to say it could be as low as 55%, and then 80% is really like the top end there. A lot of stuff right now is somewhere between 60 to maybe 70%, depending on where you're at. So um, when you think of it that way, the bank is bringing most of the money. So you don't have to raise all the capital. You don't have to have all of your own money. You have to just bring a bank in and they're going to bring the vast majority of the money. So why would you not consider using a bank? So we've got some different loan types. I'm going to break those down for you. You have agency loans. Those are your typical loans, and those are best for long-term holds. A little bit more detail on that. Those are typically 5, 7, or 10-year notes. Okay. They are amortized, or they're spread out over 30 years as far as the payments goes, but as far as like the loan duration, they're 5, 7, or 10 years. So when we say for long-term holds, If you're going to get into a deal for, you're going to underwrite it for 5 years, then you're going to use one of those options. Okay. Bridge loans. Bridge loans, it says here higher interest. It really just depends. It's on a different index here. But bridge loans, they are really for a short-term funding for heavy value add. So if you're doing a light value add, you can definitely get an agency loan. But if you're doing a heavy value add, or if you've got a property that's unstable, it's got low occupancy, it's got low collections, maybe got a number of down units, what you can do is you can actually use a bridge loan. Short-term debt, it can be variable rate there, but it's an option for you. Okay. You got a couple other another option here is local banks. So credit unions. Okay. So you don't have to do traditional Fannie or Freddie. You can actually do credit unions and you can actually get some pretty good rates using local credit unions. Those are, I would suggest that you start building some relationships, but you've got a little bit more negotiation in terms. Whereas if you go with agency loans, they're going to be a little bit more locked in. Now you can shop around there and I can help you out. If you want to hop on a call, I can help you out with determining what's best for you. Um, as far as the loan requirements, when you're working with any of these lenders, they're looking for the story on the deal. Okay. So if it's a bridge loan, it doesn't have to be performing well today, but it does need to have a good story of how it's going to perform well in the future. You do need to have good credit. You need to have some experience and you need to have some reserves. That means some extra money after you close. But I'm going to show you how you can mitigate some of that. Okay. Um, because you might not have your own credit, but you can leverage other people's. Okay. So how to qualify for a bank loan without using your own money. Okay. So if you're new to this, how do you get started? Well, this is how you do it with the agency loan. You need to find some sponsors or key principals. Okay. And what they're going to do is you're going to bring in an experienced investor with a strong financial profile. What does that mean? You might not have all the money, but one of the partners on your team could have the money. They are the person who has the experience, the track record, and has the money. Or one of the strategies we like to do is there's a lot of people who are limited partners and they are financially strong. And in the future, at some point, they want to get into a deal. They want to be a general partner. So you bring them in as a limited partner, but you have them sign on the loan. And that is a win-win right there. So you might not have the net worth and liquidity requirement, but you know somebody who wants to invest in your deal that does. Bring them in and that will help you. Okay. So I also have here partner with someone who meets the lending requirements. Definitely bring in another general partner who can do that. Also, you're going to raise capital for the down payment. So you're not actually coming out of pocket for this down payment. You're raising capital for all of that. So even though you're leveraging the bank, they're bringing money. Now you're bringing in the syndication part where you're bringing in money to do that. Um, and then as long as you have a good story to your deal, then you're much more likely to get the lending there. So when you get further down the path, I actually like to work with mortgage brokers, and those are people who go out and they look at lots of different loan options and they'll bring that back to me. Okay. Then there's another one here. So that is about working with banks. And then there's another option here, and that is seller financing. Seller financing is a pretty good option, but it has some limitations to it. Okay. So I'm going to talk to you now about seller financing. And what's great about this is you don't need a bank at all. So the seller acts as a lender instead of the bank. So you need someone who owns the property. They can't be a loan on it. Because it's seller financing, no strict credit or income requirements. Okay. So they're not going to look at, how much money you've got in the bank. Well, they may not, but it's very different. You're dealing with an individual who is they're turning into the bank. So it gives you a lot more power to negotiate the terms, interest rate, down payment. So for example, there was a deal that we were looking at. It was going to be seller financing. And we were trying to negotiate terms where we had more interest only time period with a lower down payment requirement and a lower interest rate. So because it was the seller financed, they didn't have the same requirements as the bank. So we were able to negotiate with them. I will say typically this does work best with motivated sellers. who want to avoid taxes or offload a property. So you're not going to find as many of these, but I do think it's a good option. There's also another thing is you're not going to find really large deals like this because all these larger deals, they're institutional, they're owned by syndicators, they're owned by REITs or something like that. And so they're not going to be interested in seller financing. You're probably going to need to find some property that's in the 20 to 30 unit range or below in order for it to truly be seller financing. Okay. So how do you find these seller financing opportunities? You're going to be looking for landlords who want to get out of deals. And so this deal we found a little over a month ago, we had submitted the offer. It was a husband and wife. I think it was built in the mid 70s. A husband and wife, and um, they'd owned the property for their whole lives, and they had recently gotten a divorce in the last year or so. Hadn't renovated the units. I mean, they didn't let it like go downhill. They kept up with the normal maintenance. You know, the carpets and everything were good. But the lady was she was done. She just like I don't want to do this anymore. So she just wanted to get out of it. So that was a motivated seller. She just didn't want to be doing the landlording anymore. Um, Off-market deals, and you can do direct mailing, but you could also find some broker deals. So this particular deal I'm talking about, it actually came from a broker, but asking the right questions, seller financing was available. And so we do see that, and we're seeing more and more of that these days. But like I said, it's with smaller deals. And the way to win this is it's a win. It's got to be a win-win. So how is it beneficial for the seller? What do they really want? And then how can it be beneficial for you? And I think one of the big ones for the seller is if they don't have to take this huge like $1 million payout, then they don't have to take a big tax hit. And that could be the big opportunity there. All right. So the secret here, the real secret to all of this, guys, is you want to combine strategies for 100% of other people's money going into your deals. The one thing I didn't mention here, and it can fold into any of these, is private equity. And private equity can bring a lot of money to a deal as well. And so they might bring up to if you're working with a lender and the lender's putting in 70% and you've got to come up with 30%, the private equity might come up with 80% of that 30%. So then you're only going to have to come up with a few $100,000. So if you're looking at it that way, you'd have the bank coming in, you'd have some private equity and syndication. So you can stack these things together and actually get into deals with little to no of your own money. And that is the secret here for getting into these deals. So if you were to do a syndication, a bank loan, it would be limited partners fund the down payment and the bank funds the rest. So bank loan with seller financing, the seller carries a second note, reducing your upfront costs. So when we talk about that, it's the bank comes in, you pay them first, and then the seller carries the rest of the financing, and then they get paid second in that structure. Or you could do seller financing plus a syndication, which is exactly what we were looking at on this other deal, that we would do seller financing and we would still raise capital. So the seller would finance it up to a certain amount, and then we would go get syndication. We would go raise capital to fund the rest of the down payment, the closing cost, and any of the renovation budget. So there's some really good strategies there, guys, to get into these apartment deals. And I'm not talking a duplex or a triplex or a fourplex. I'm talking a 20, 30 unit, 40 unit deal or larger without having to use any of your own money. So what are some of the key takeaways here? I want you to understand, like I said, you don't need your own money to buy multifamily deals. I've been in multiple multi-million dollar deals, and I'm coming up with very little money of my own to get into these deals. You're going to use syndications, bank loans, and seller financing to fund your deals. Take the time to build relationships with investors, lenders, and sellers. All of this is going to be beneficial to you. The key to success here is find great deals and structure them properly. And if you don't know how to do this, then you're probably going to want to get some help for this. But I'm going to check really quick and see. Looks like we don't have any questions yet. So if this all seems good to you and you want some help doing it, then I have an opportunity for you. Look, I know that buying your first apartment deal is hard and it can be lonely if you try to do it alone. But what if I could help you solve that problem? Your biggest problems are going to be underwriting the deals and how to fund your deals. So what if I could help you solve that problem and then show you how to get into your first deal? What would that do for you? And their answer is that would probably change everything. It would get you out of where you are now, where you're stuck. You've probably been thinking about this for, 1, 2, 3 years of how you can get into an apartment deal and start getting that financial freedom and that time freedom and living life the way you want. So the opportunity I have for you is if you guys are interested, I want you to schedule a phone call and we'll see if this is a good fit. And what I have is it's a multifamily mastery accelerator program. And the way we've set this up is it's a coaching program. And I've done a lot of different coaching programs, and this is the one that works the best. So this is not a do it yourself. It is not just here's a bunch of videos, like good luck. It is also not done for you. So you're not having to come up with a whole bunch of money out of pocket turnkey. I've seen some of that before. This is a done with you. So this is going to be a group coaching opportunity for you. And what I want you to do, if you're interested in that, then what I want you to do is you're going to drop a link here in the chat in just a moment. And I want you to schedule a call with me. And all we're going to do is we're going to take a look at what your goals are, where you're at now, where you want to be, and any obstacles you've got. And if I think that this program might be a good fit for you, then I'll walk you through how that process works. And if it doesn't, then I like to think I'm a pretty honest and straightforward guy. And I'm going to point you to some resources that are going to help you get there the best way that works for you. So with that, I think we've got that in the chat, the link in the chat. So anybody who's interested, go ahead and use that link, schedule a call. I've got a few spots open next week and we can get that set up. But what I want to do is I want to turn it over and see if we've got any questions about how you can use other people's money to get into your first deal or your next deal. Let me be quiet. I'm going to pause for a moment while we wait for some of those questions to come in. And I know some of the other questions I get is how do I find deals? That's a training that we do. We try to do once a month. And so we would have that available for you in the classroom area of how to find and locate deals. Another question we get commonly is how do I know if it's a good deal or not? So we also got some more training on how to underwrite deals. 4-step approach there, how to just quickly underwrite a deal. And then we've also even got some more strategies of how to raise capital if you're going to do syndication from other folks. So those are some other common questions we get. So, all right, folks. Well, listen, I appreciate you taking the time to join today. As always, if you've got other things you'd like to learn about when it comes to multifamily investing, go ahead and send us a message. Go in the school community. Check out some of the other trainings we've got there, or leave a comment, leave a suggestions in the comments below if you're watching this in the recording. So, all right, guys, I appreciate it, and I will talk to you soon.